I now hand the conference over to Mr. Anupam Gupta from IIFL Capital Limited. Thank you, and over to you, Mr. Gupta.
Thanks, Margaret. Good morning, everyone, and welcome to the post-results conference call for Tube Investments. From the management, we have the entire team joining us for the call, led by Mr. William Soya, who is the Managing Director. We also have Mr. Arun Murugappan, who has taken over as the Chairman of the company recently. We have the respective business heads, Mr. Mukesh Ahija heading the tubes business, Mr. Srinivasan, who heads the metal forming business, Mr. Paul heading the cycles business, and we have Mr. Mahendra Kumar, who is the CFO. We have the finance team also joining in, Mr. Ramanujam from there. So I'll hand over to Mr. William for further comments and then take over for the Q&A. Over to you, sir.
Thanks, Anupam, and good morning, everybody. Just quick highlights for the quarter. Our revenue for the quarter was at 1,309 crores, compared with 976 crores in Q3 of last year. Our profit before tax, before exceptional items, was at 145 crores, and that's a growth of 53% over the same period last year. Now, return on capital employed was at 26% compared to 20% for the previous year, same period. Also, the good news is that we continue to kind of keep a very high free cash flow to PAT ratio, and this quarter, we generated free cash flow of 130 crores. The company also declared an interim dividend of rupees 2 per share at an aggregate level for the first time this quarter. The company has actually gone to negative working capital. So the PAT for the quarter was 107 versus 78 for the corresponding period last year, because last year in this period we actually had a lower tax regime because we amortized the move to 25% over 3 quarters. The individual businesses, engineering had a very strong quarter. Revenue was at 733 crores compared to 502. Part of this obviously is due to the steel price increase as well, and the PBIT was at 102 as against 60. Cycles and accessories also had a very strong quarter. Revenue of 234 as against 146, and PBIT was 15 crores compared with 1 in the same quarter last year. Metal forms, the one area that was not as strong was in railways, but overall revenue of 393 versus 370 in the same quarter last year, and PBT of 46 as against 33 in the same quarter last year. This quarter, obviously, for consolidated results, we also have 1 month of CG Power results in there. So, including that revenue, our consolidated revenue was at 1,700 as against 1,087, and profit at 159 as against 99. As you all know, we took a controlling stake of 53.16% in CG Power and Industrial Solutions over the same period. It actually consummated on 26 November 2020, and the revenue for the company for December 2020 was 276 and a PBT of 7 crores. This is for CG Power. Antigears, the other subsidiary, had revenue of 65 versus 58 in the corresponding quarter, and PBT of 10 versus 8 in the corresponding quarter. So commenting on the financial results from Mr. M.A.M. Arunachalam, Chairman of CII, also said, CII has delivered strong results driven by the overall revival in the economy and easing of the lockdown restrictions for COVID-19. The company is witnessing improved performance in most of its segments and expects this momentum is likely to continue as the economy, which has started showing signs of revival, improves further. So that's a quick summary on the quarter, Anupam, and overall, I think kind of the environment, like Mr. Arun Murugappan mentioned, continues to be showing good signs of recovery, and we're quite bullish about things going forward. So let me stop with that and then turn it over to the audience for questions.
Yeah, Margaret, can you go ahead with the questions, please?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and one at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Niket Shah from Motilal Oswal AMC. Please go ahead.
Yeah, thanks for the opportunity and congratulations on yet a good set of quarter to the entire team. I have few questions. First, if you can, is it possible for you to give us a brief sense of how much was the volume growth across segments, because this quarter would have seen substantial amount of realization growth as well?
Yeah. So I think if you say kind of, and obviously kind of, we don't, we've got some data, like, but we don't kind of give data in too much kind of granular detail. But if you take, Mahendra, maybe you can give it just for, kind of at an overall aggregate level across kind of engineering and.
Yeah, of course. I think it is there in the segment results also in terms of the total revenue. But in terms of volume, if you see, cycles had a very good growth of close to about 70% year over year in terms of volumes. Engineering also pretty strong growth, including large dia and also the normal tubes. The overall growth was anywhere between, depending upon the segment, anywhere between 28% to or 30% to almost like 50%. And metal form products also, it ranges anywhere between, of course, leaving aside the railways, it is ranging anywhere between 10% to 30%.
Sure, that's very helpful, sir. The second question was on the metal form part of the business. If you have to look at the YOY numbers, the growth appears to be lower compared to the other businesses. Is it largely on account of railways itself, or because there are other categories like door panels, fine blanking, industrial chains, auto chains? I'm assuming all of them would have done far better in this quarter. So is it just on account of railways that the growth is lower, or is there something else that we should be looking at?
Yes, that's accurate. Actually, railways is the biggest for lack of growth in it.
Yeah, there are a few new business also which we will club under this, but that's not a big number. Okay, it's mainly railways.
Okay. And the last question was on the PLI scheme which the government has kind of rolled out. How are you looking at that, as an opportunity, from tube perspective? That's the final question. Thank you.
Yeah, we're evaluating that. I still don't think we have an answer on it. We're looking at it both sides, which is like our existing businesses, are there any adjacencies that we can get to, or are there new things that we can get into? But we don't have a perspective on that yet. I think by next quarter, perhaps we can kind of have a better perspective on it.
Perfect, sir. I'll come back and see for more questions, sir. Thank you.
Okay.
Thank you. Next question from the line of there's some disturbance from your line. Ladies and gentlemen, request. Ladies and gentlemen, thank you for patiently waiting. We have the line for the management reconnected now. We'll move to the next question. The next question is from the line of Sujit Jain from ASK Investment Managers. Please go ahead.
Hi, Vellayan and team, and congratulations on a good set of performance. Some remarkable improvements both in TI and as well as the turnaround in CG that you are on. I have few quick questions. You can just note them down. In media, there are articles that TI could be looking to enter into auto manufacturing. CG Power, obviously few steps at a time, but if I look at the competition is already moving in the direction of OPEX-led opportunities. So, the Siemens, Mindsphere and ABB Ability, these are the, templates they are developing worldwide and taking those use cases, putting sensors on equipment and have started selling those solutions IoT based. So directionally, eventually, how does the group look forward to? Retail HT Motors, there'll be a no compete agreement between CG and Crompton Greaves. When does that get over? And if there is a thought that if you can launch them, that was a very strong segment for the erstwhile company. And in the CG Power call that you did post acquisition, you had spoken that you will update on the contingent liability of overseas business. I missed the opening remarks, but if you have some remarks here. Thank you.
Yeah. Hey, Sudeep, so thanks so much for the question. What I would request is that, here we stay focused on TI questions. What we've said, I think, kind of is that after, the April quarter, we'll basically start doing CG calls as well. But, otherwise it kind of gets confusing because we'll have, do a lot of CG questions coming in here as well. So that would be our preference. So first to address the TI question, yes, we are entering the electric three-wheeler business. So basically we're going to start manufacturing and selling electric three-wheelers in India. And so that will be around, so in our sense, kind of, perhaps the December to January timeframe. Just a quick kind of response. Like I said, all the CG strategic stuff I would just say we move and kind of address more on our CG call. I think from a TI perspective, just suffice it to say that we are more than satisfied with the rate at which we are seeing kind of performance come back at CG, though it's early days there.
Sure, appreciate that. In three-wheelers, if you can just elaborate whose technology you want to deploy, is it in-house, and the battery sourcing, etc.
Yeah, so obviously we won't start discussing where at a component level. The technology is a combination of in-house plus we used a Korean firm, so we partnered with the Koreans on the design and the tech.
Okay, and one quick question is on the cycles business, the opportunity that is there overseas in fitness bikes, which are high-end bikes. Anything that we are doing to tap into that?
Yeah, this fall here, I head the bicycle business actually. What we are doing is we are upping our ante, very much on exports. This year, almost will be like 4 times the volumes of last year in exports, and we are taking a very aggressive posture for the next 4 years on selected markets, on medium to high-end bikes. And we believe that that will form a very big cornerstone of cycles in terms of driving the top line growth as well as the bottom line growth. And we actually at the back end, putting up some facilities that will help us towards this endeavor.
Sure, thank you. Good luck.
Thank you. Thanks so much.
Thank you. The next question is from the line of Akshay Bhor from Premji Invest. Please go ahead.
Hi, Vellayan and team, and thank you for the opportunity. I just have a couple of questions. First one is, Given that your role in some of the other group entities has expanded over the last few months, what does that mean? What does it mean for your tenure and engagement with Tube? What implications does it have?
Hey, sorry, I think I don't know if it's us, Margaret, but we can't hear so clearly.
Sorry about that. Can you hear me now? Or?
Yes, this is better actually. May I request you to repeat your question, please?
Sure. Hi, Villain. And my first question is, regarding your role in some of the other group entities. What does that mean for your engagement and tenure and involvement in Tube itself? And if you can just give us some color on that.
Yeah. Okay. So thanks. I think that's a good question, and I think it's kind of come up in different ways in the past calls as well. And I think kind of our stand, our perspective remains the same. I've always said, even prior to kind of Mr. Murugan's retirement last November, that there will be kind of a slightly expanded, or kind of a role that I would play. And so I think you're referring to kind of, the role in Chola as well. So basically, as you know, kind of both the teams I've worked with extended periods of time. And so yes, I will be providing kind of, supervisory oversight there as well. I don't see that kind of taking away from the role at TI. And so basically it's kind of, and obviously kind of at all three companies over time, we will look at succession planning, but my role in TI will continue, as I've always said, for the foreseeable future.
Sounds good. And just a clarification on the electric three-wheeler opportunity side, would you be competing against some of your customers in the existing businesses? And does that how does that balance play out?
Honestly, kind of if you see, it's an environment where we don't see kind of too much against kind of our existing customers, especially not in the businesses that they are in. We don't supply too much into the three-wheeler space today.
Thank you.
Thank you.
Thank you. The next question is from the line of Susmit Patodia from Motilal Oswal AMC. Please go ahead.
Hi, good morning everyone, and congratulations on a phenomenal quarter. It's quite commendable that you have negative working capital. I think it's quite a big achievement. First question, Ryan, is if you could give us some update on the lens venture.
Yeah, so Susmit, thanks, and trust you are doing well. I think the lens venture, like we told you, basically got slowed down because we're using all Korean equipment, and the guys who had to install the equipment basically had a challenge because they've not been able to come here during COVID. So our sense is now that we will have somebody coming in this month. So we're basically producing in multiple operations except for the coating of the lenses themselves. But we're hoping that by next month we will have coating in place as well. In which case that, I think fairly shortly after that, we will get to the capacity of the existing facility, which is 500,000 lenses a month. So my sense is that we should be able to keep that in the April-May, towards the end of the April-May-June quarter. And then basically if we do that and are able to maintain quality, then we'll start thinking about an expansion plan there. But basically like I said, the only delay on that has been because the Korean equipment manufacturers were not able to kind of come during this COVID phase.
Okay, got it. So Q3FY22 should be a quarter of full ramp up, and if things go well, then the next steps in that.
Yes, that's my sense.
Okay. And second thing, what I'm used to seeing back is, you're now embarking on this three-wheeler project. and you have the lens to ramp up, and you have CG power. So is there enough on the plate, or there is more space on the plate to do something?
No, I mean, I think we've always articulated kind of a path, right? So Smith, kind of our path has been, like it's been TI1, TI2, TI3.
Yeah.
Lens and three-wheeler are part of TI2. And the thing we've always said is that, see, honestly, kind of, none of this stuff is on my plate, actually, right? It's all distributed on multiple plates. Electric three-wheelers on KK Paul's plate. The lens business is on KRS or KR Srinivasan's plate. And like NS is running CG, who's kind of handle the group as well. So a lot of it kind of is more from a bandwidth perspective. I think if we don't enhance capacity, we also have to show that we can grow. And it's constantly a question of how much capacity we can enhance as a company. And so a lot of what we are talking about internally from a talent perspective as well is how we build organizational capacity. I think kind of that is where a large portion of our effort is kind of focused. So honestly, I think that we've always articulated that both TI2 and TI3 have to be firing along with TI1. And hopefully, kind of over the next couple of years, you can see that coming into reality, and we can deliver numbers from those two as well. So that's really our intent. Doesn't mean, obviously, kind of TI3, we've told you, it's kind of like a Danaher-like approach. So, the one good thing is that, once, TI is kind of, so both when we can kind of get leverage down in both companies, it's an approach that we're taking, right? So basically, it's kind of, not kind of just a one-off acquisition. We said that we have to keep on acquiring over time, but we won't do it and put too much stress on the balance sheet of the company. And that's something we're very particular about, right? So we don't want stress on our balance sheet. And so, I think that this is a direction that will continue.
And just lastly, just to clarify if I heard it right, what would be the timelines of the two-wheeler business? When would be the first prototype?
Three-wheeler? You mean electric three-wheeler?
Yeah.
No, we already have working prototypes now. Like I said, we've been working with a Korean design firm on this.
Correct.
We plan to go to market in the January timeframe.
Okay, got it. And last question, what is the net debt now at the books of TI?
Yeah, so end of Mahendra here. End of December, it was about 60 crores.
60 crores.
Yeah.
Okay. Thank you and all the best. May you have a great year ahead. Thank you very much.
Thanks, Krishna.
Thank you. The next question is from the line of Abhishek Ghosh from DSP. Please go ahead.
Yeah, hi team. Thanks for the opportunity. Just a couple of questions. How should one look at the gross margin in the current quarter given sharp increase in commodity prices? Is there an impact of that in the numbers?
Mahendra, what is your kind of Yeah, I mean, the quick answer on this is kind of has affected a bit, but Mahendra, you can just.
Yeah, so if you're referring to the commodity prices, mainly the steel price increase, it will start reflecting from Q4 onwards. And there will be some kind of a time lag in recovering it, but as of Q3, there is no significant impact because of the commodity price increase in the margin.
Okay. So 4Q will see impact of RM and you'll have to negotiate with your customers to kind of get that thing. Is that the way to look at it?
Correct.
Okay.
We have always been able to recover it, but there could be some time lag, but we should be able to manage it.
Okay, great. And in the metal form division, is there also an impact of export being a little weaker or in the other segments because of container availability and other things?
Karen, your answer?
Yeah. The exports have been slightly lower compared to last year in industrial chain business, of course, because of the overall global scenario due to COVID. And there are some challenges in getting the containers also. That is true. But the real issue in metal form is the slowdown in railways due to the railway coach factories have not ramped up their production, which is likely to get corrected in the coming quarters. Yeah.
Okay, great. And if we can also get clarity about the development in the truck body part of the business and the overall scrappage coming through, how should one look at that part of the business?
So, I think obviously kind of last year has not been great for kind of overall CV sales. And as a result, kind of, truck body also kind of did not expand as much because it was fairly kind of low year for overall CV sales. So this coming year, I mean, again, right, so I mean, I think like we told you with some of these businesses, they'll take a little while to pick up, and so kind of we don't expect them to meaningfully contribute to numbers in the early days. But this coming year, we do see that we should be able to expand our business, and we'll probably kind of give you some estimates and numbers at the end of the year.
Oh, okay. And just one last question from my side. You are at just barely with any net debt now. Most part of the CG cash outflow has already gone, and you are generating, close to 100 crores of cash every quarter. So how should one look at balance sheet more from a 2-year, 3-year perspective? From that perspective, if you can just give us a broad outlook.
Sorry, how can one look from managing?
So where I'm coming from, the one part of the cash outflow to CG Power has already happened. Despite that, you barely have any net debt now, and you're also generating 100 crores kind of a cash flow every quarter now. So 200 crores goes into three-wheeler, but that's just about 2 quarters of cash flow. So there is a significant amount of cash flow generation over the next, and CG Power will also start to throw cash flows. So how should one look at it? Are you already kind of evaluating, or will you wait for some time to consummate the CG Power thing and then probably look at it? How should one look at it? If you can just help us understand.
Like we said, right, I mean, overall, the thing is, in our consolidated books, we don't want to look at this, right? Now, what you have to look at, and again, kind of this is a process we're also learning, when we look at companies like Canada and kind of a lot of guys who just do this, how they do it well, right? Basically, you need to, it's like you guys do in the investing business, right? You need to create a continuous pipeline, right? But, timing could kind of move out 1 quarter or 2 quarters, right? But, so if your question is kind of, are we evaluating? We're always evaluating, right? What I want to kind of, say explicitly is, and we've said this before, which is we won't take too much debt because we don't want to have too much debt on our consolidated balance sheet, right? We won't do transactions that basically kind of levers us up too much. And honestly, we're not, to answer your question directly, we're kind of nowhere close to looking at any acquisition right now in any level of detail. We said that first what we wanted was for CG to basically fully consummate. So till we get very comfortable with CG and we get the debt down there, we're not going to make another acquisition. If that was your question.
Okay. So that helps.
Also, CG free cash flows will have to be used for repaying CG debt anyway, because they have debt on their balance sheet.
So I think the relevant number to then look at is a consolidated debt and not the standalone net debt, because you want group, overall net debt to be at manageable levels, and then only look forward for future. That's the way to probably look at it. Is that correct?
That's a good way to look at it, right? Which is, as long as we have consolidated, a large amount of consolidated. And large varies, it depends, right? Whatever I told you, we're South Indian, so large is a smaller amount of debt in the south. Till we are comfortable with overall debt, we will not do it.
Great. Okay. Thank you so much, and wish you all the best. Thank you so much.
Thanks.
Thank you. The next question is from the line of Ashutosh Tiwari from Equirus. Please go ahead.
Thanks, sir. Congrats on strong set of numbers. So I have a question on engineering division. We have seen a very sharp increase in sales. So is it driven by the pickup in CV and that we saw in the last quarter? And even going ahead, I think these sectors are further. So can we expect this top line that we did in this quarter on engineering side, data from year on year?
You want to answer that?
Yeah. Yes, your observation is right. Especially in this quarter, all the three segments where engineering business is based on. One is automobile industry, second is related to construction industry, which is off-road vehicles, as well as the exports. All the three segments have done pretty well this quarter, and we hope that is going to go forward. We'll be doing well only year on year. Because base is already corrected a lot in this year, so there is only headroom for growth available going forward.
Okay. So my question is that can we, like say, the revenue that we did in this quarter, can we build up from there as well? Because I think CVs will obviously be higher than what the industry volume was in last quarter, and probably construction equipment also can pick up from here. So can we assume that this base will probably now remain there and can we build up on that?
Yes, CV industry is expected to do well because government is also pumping a lot of money on the construction industry, and like you rightly said, base is corrected too much already, so there is only going to be growth going forward, and there should be a bullish growth going forward. That's what is our estimate.
Yeah, but please don't take it as a forward-looking guidance.
Sure. So secondly, on this, so we are developing basically a product for export market on the engineering side. Any update on that from what time we expect that to commercialize?
So those product developments already is going as per our plan. We've already submitted the samples for new project what we are running it, and it is expected to samples get approved by Q1 or Q2. And beyond that, our growth in particularly new segment where we are investing it will start clocking from Q2 and Q3.
Okay, so from Q3, second half, maybe we'll see some benefit of that coming through.
Yes.
And sir, lastly on this engineering division, only the margin part, so we have, despite this very ramp-up, I think margins have come down a bit on a quarter-on-quarter basis. Is it because of the commodity pressure that we saw in this quarter, or some maybe mix change is the reason?
Like Mahendra already explained, this quarter there is not much of impact because commodity prices have started coping up from Q4 basically very high. Q3, whatever impact was there, which is already recovered. And we could see a time lag in the Q4, but ultimately it will get recovered fully. That's what is the arrangement we have with our customers.
So my question was, let's say Q2 to Q3, despite the revenue growth, we have seen margin compression in the engineering division. So is that because of mix, basically, a change in mix?
Yeah, there are a couple of things. One is mix. The second one is, quarter to quarter, it is difficult to compare in this business because there will always be some lead or lag in terms of price recovery. So that may not be the right way to compare.
Okay, got it. Thanks a lot, sir, and all the best.
Thank you.
Thank you. I would request participants to please submit your question to 2 at a time. The next question is from the line of Aditya Bakul from Axis Capital. Please go ahead.
Hi, Vellayan and team. Congratulations on a great set of numbers.
Thanks.
My question, so sir, my question is more in terms of our long-term outlook, right? Over the last 2 years, we've sort of checkmarked our ROCEs, we've checkmarked our cash conversions and PBT margins. Coming to the fourth point, which is revenue growth, how do you see that as a trajectory? You earlier highlighted that 8 to 10% could be a sustainable sort of a growth momentum. Have we seen a step up there in this quarter, and is this a beginning of a higher growth trajectory?
So actually, I think thanks for the question, right? See, again, revenue growth, it depends whether you're looking at standalone or console, right? Because the basic challenge, right, in India is because in India it's kind of more driven by standalone. Now the challenge, like with the CG acquisition is that does not, it's basically, it ends up being a separate entity. Now, if you look at it, kind of the way we've articulated it is TI1, TI2, and TI3, right? So TI3, like CG, we're using free cash flow from the company to go and buy another entity. And so unless kind of that growth is also kind of seen as part of our overall entity's growth, it brings a different lens to how we look at or evaluate the company's growth. Right? So that's the first thing, right? And so you guys need to kind of think of how are you going to solve for that. You can basically take kind of our ownership interest in CG. However you want to think about it. But I think from an from an analytic perspective, you need to think of how you're going to solve for that, right? Because clearly, if we're going to take cash flow from the main entity and use it for acquisitions, we need to think if those acquisitions end up being standalone entities, how that kind of drives into the growth, right? The growth drivers like we said, we have three engines of growth. The growth within TI1 itself, which is the organic businesses.
Right.
And I've said that can range from 6 to 8% over the cycle. Right now, obviously, we're seeing kind of more growth than that, for a couple of reasons, right? You have base effects also there because, up with, a really bad, first quarter this year. So we're seeing some of that play in. This is that the growth will sustain into next quarter. And into next year. And then you're basically, like I said, over the cycle we see TI1 growth being 6 to 8%. Now TI2 has not started kicking in yet, right? But our belief at least next year is that TI3 will kick in with CV's numbers, because but how you choose to add that to your model, I think it's something that you have to drive, right? I mean, it depends on how you will do it.
Right. No, sir. My question is more to do with TI1. Just wanted to understand. We've seen a robust growth in cycles. Athleisure has been a key focus area at least during the last 10 months, and even within the engineering segment. So specifically for TI1, are we seeing a step up there?
TI1, I mean, it is a step up, but we also got to realize that TI1 is a bit more cyclical, right? So I don't want to kind of move away from the thought that over the long term, putting too much more than 8 to 10% pressure on TI1, I don't think is the right way to look at it, right? TI2 has to kick in. TI2 will be part of TI standalone, but it has to kick in, which is where the electric three-wheelers come in, which is where Lens comes in. And those businesses are not kicked in yet.
Understood, sir. Sir, my second question is again trying to understand. You've talked extensively about Japanese influencers who driven TQM and productivity management. Where are we in the journey there, and how do you see the next 2 years or 3 years back?
I think we're very, very early. I mean, I think we've barely kind of not even got to we're in kindergarten, I think. And so again, we've been trying to kind of work more with kind of more folks from Japan. Unfortunately, kind of everything is shut down because they can't travel here right now. And so I think we're just waiting, and just kind of but the more we kind of try and understand that, it's just like an ocean that we have to basically kind of drink from, and so there's a lot to learn in that space, right? And I just think it's highly exciting in terms of the prospects of what that can do for TI. But I would just say that we are absolutely in our infancy in that right now.
That's very encouraging to know. Thank you, sir, and best of luck for the quarters to come.
Thanks, Aditya.
Thank you. The next question from the line of Vimal Gohil from Union AMC. Please go ahead.
Yes, sir. Thank you for the opportunity, and congratulations to Viren sir and team for putting up this splendid performance. Sir, my question is firstly on TII standalone, and just following up on Aditya's question. My question is on margins actually. The company is way past the 10% PBT that you had guided for. What would be the outlook there going forward? Clearly, despite the revenue growth not supporting in FY20, you still have achieved and overachieved that number on PBT front. That is question one. The second question is on the lens business. I think what you mentioned on the volumes that you're targeting or the production that you're targeting is 0.5 million a month, right? If I have not got it wrong.
Correct.
Yeah. And the third question, sir, would be the negative working capital. Is it sustainable? I mean, the factors driving it, will it sustain on a negative trajectory going ahead as well? And lastly, if you could just comment on the metal forms business, excluding railways, how it has grown. Thank you.
And you asked me so many questions. My RAM is only so much. I have a very small RAM, man. Can't remember it. Okay.
I'll ready.
My thought was PBT, are you saying are we expanding our target? We do believe that PBT will expand over the next few years. We don't want to particularly set a target right now, but we do believe that we will be able to expand PBT. Okay, your second question was on negative working capital. Honestly, part of the challenge right now is that, even if you want to buy steel, you can't buy steel, right? In the sense like there's not enough available to go around, right? And so that's also basically driving down, our working capital levels. I think, we still have to determine what will be kind of a stable level, whether it will settle at kind of close to zero or a number, slightly above that. I don't think we're going to go back, the 300, 400 crore levels we used to be at. But it may settle at a number slightly above this, just to kind of building something into a model or something. The last question was, MFPD has already been hurt by railways, and I think the answer that I've already answered. The answer is yes.
So excluding the railways, how is the metal forming business done?
And well,
Yeah, like what I mentioned, it is in the range of 20 to 30% and varies from segment to segment.
Brilliant. Thank you so much, sir, and we're looking forward to this separate CG call, maybe Q4 onwards. Thank you so much.
Thank you. The next question from the line of Kruti RS from UTI Mutual Fund. Please go ahead.
Hi, good morning, sir. Congratulations to you and your team on this remarkable performance. Sorry, this is repetitive. My question is on the three-wheeler electric business. If you could provide us a bit of background on how we zeroed in on this business, what is your assessment of the current market size and potential? At this point of time, we understand the segment is dominated by lead-acid battery-driven electric vehicles. So, and it's highly fragmented. And also, if you can tie it back to our strengths and what is our right to win in this segment.
I think I'll answer. I'm Paul here. I head the bicycle business again.
Sure.
I'll try to answer this question in two parts. The first part was, we are basically upbeat on, how the EV space will play out in India for a number of factors. What the government is doing, clean environment, post-COVID. So that optimism is with what we started this endeavor about a year and a half back. I think we've looked at design, we've looked at the value proposition, we've looked at why somebody will buy it, we've looked at the total cost of ownership and how does it compare with the current way, and how we will get him to adopt EV. We must also remember that there's a lot of environmental factors like drop in prices of battery, etc. That will happen. The swapping that will happen. Easier for somebody to switch to EV. That's how we zeroed in on this. And then, we are in bicycle business, so we raised our vision to say eco-friendly mobility. And therefore, the vision got enlarged from just cycling to mobility and eco-friendly, and therefore EV. So there's a fit of EV into our vision, and therefore what we are pursuing. Coming to specifics, broadly at this stage, we've done a lot of reliability tests, we've done design tests, we've been in consultation with our design partners, and we are quite hopeful that we'll deliver something good for the market and for our customers, and thereby win, over a period of time. Does this answer?
Yes, sir. And if you could highlight any synergies with the cycle business in terms of manufacturing or distribution?
So again, right, I think, the synergy question has come up multiple times in the past, right? And one of the things we said is, there's a reason why TI is kind of taking this approach, right? Which is we want to kind of move away. If we only want to say synergy, then we're going to be an auto component supplier our entire life, right? And honestly, we do not want to be that. We want to we want to reduce kind of our dependence on kind of just auto, because being an auto component supplier, we see two challenges with it. One is it's very capital intensive, and the second is it's very cyclical. The cyclicality kind of doesn't create an ability to generate consistent and constant cash flows. And we don't see that as kind of good for a company that has to be able to deliver consistent growth over time, right? So hence, the same question was asked even with CG. What we see as common principles, right? So I think, I forget it is, I think that Aditya or Susmit that had asked the question on the Japanese. Japanese lean principles, Japanese production systems, as it were, a production system, and PQM, we see as applicable across businesses. And we believe that that is what creates leading manufacturing businesses. Our interest and intent is to basically create leading manufacturing businesses in the country using those principles as a way to compete, right? Using lean, using PPS, using PQM. And we believe that those principles are applicable across various industries.
Sure, sir. Great to hear, and good luck to you.
Thank you. Thank you so much.
Thank you.
Thank you. The next question is from the line of Anupam Gupta from IIFL Capital. Please go ahead.
Yeah, hi, Vellayan. So two questions. Firstly, on the cycle business, you said that there's a significant emphasis on exports. So just to, what sort of current revenue is coming from export, and what is, in terms of between the normal Indian business, how fast is that growing, and can that sustain? And exports you mentioned will get doubled in this year. But just give you some picture on the domestic as well as the export business separately.
I think in the bicycle business, the way we looked at it is currently the revenues coming in from exports is about 5% of our turnover. Moving forward across the next 4 years, the way we planned it out, that it will start contributing between 20 and 25% of our turnover as well as.
Okay. And yeah.
That's it. And again, we have to first to compete in this market. I mean, there are a lot of favorable headwinds that are happening in this business, with.
Okay. And the domestic business, how fast is that growing? Is that pent-up demand, or do you see that sustaining?
The domestic demand this year has been very good. In terms of this, the market, if you take, post opening of the COVID, the market has grown between 20 and 25%. But if you look at a historical perspective of the domestic market, then it's been between 1 and 2%. So obviously, we will have to look at to get the growth engine. Export becomes a big factor for us. But having said that, to earn the right to export, I think, we have to build our cost competitiveness and velocity and compete on QCB really. And that's what Mr. Vellayan was explaining, the initiatives that we are taking up with the Japanese, etc. Utilizing those principles that help us to, be very competitive in the manufacturing space. And with that, then, we have all the markets at our disposal to be able to compete.
Right.
So us that are looking at this export scenario is looking, because we mostly have predominant position in the domestic market, as we know. Whether it's a steel business or a cycle business, we are even number 2.
Sure. The second question for just relating to CG Power is not necessarily about how it is doing. They have given a lot of reduction in the contingent liability. So the question for you is, do you see any further investment from TI going into CG Power for meeting any cash shortfalls for contingent liability? Do you see that happening at all?
We don't believe that there will be a need at this stage.
Okay, so CG Power should be able to handle all the cash flow needs internally, basically.
Yeah.
Okay, understand. That's all. Thank you.
Thank you. The next question from the line of Kashyap Pujara, an individual investor. Please go ahead.
Hi, Mr. Vellayan and team. Congratulations for a great set of numbers.
Thanks, Kashyap. And Ashok, it's strange to see you at this end of the line. Actually, I think to all on the conference call, I just want to say a big thank you to Kashyap. Kashyap has been hosting our conference calls from Axis for the last 10 years, I believe. We're actually kind of seeing Kashyap from kind of the other side. So, Kashyap, congratulations and don't ask me any hard.
No, thanks. I think this was one of the first companies we covered, when I started covering. And I think it's been a great journey because over time, TI has gone up 10x. And apart from that, there has been Chola Financial Holdings and Chola that have kind of come out. So it's been a great journey over that time frame. But I'm sure to look forward to, interacting with you more as I join in my new engagement next week. So look forward and congrats for a great set of numbers. Mr. Velan, I just had one question. I think most everything has been kind of spoken about. It's very encouraging to see Q3 PBT at 145 crores and PAT of above 100 crores. So actually we are annualized run rate is any which way now 600 crore and 400 crore plus, and we are at 11% margin. I think I remember discussing in calls prior with you, and you said that over a mid-term, maybe a 3 to 4 year horizon, aspirationally you wanted to kind of get to that 15% mark. So I hope that is that continues and there are no changes to that plan.
Yeah, so I think broadly, like I said, right, a lot of this is driven on operating disciplines, right? And like I said, the reason that kind of slowed us down this year is the fact that we've not been able to get some of the Japanese in here. I think there's a lot for us to learn from them. We still have to learn a lot more. So our belief is if we're able to kind of apply those principles and kind of maintain the high level of disciplines that are needed, we will be able to get to those numbers, right? So that continues to be our belief. Right?
Great. Thank you, sir, and wish you guys all the best and look forward to being in touch with you.
Yeah, thanks, Kashyap.
Thank you. The next question is from the line of Rohit Ohri from Progressive Shares. Please go ahead.
Hi, a couple of questions for Shanti. Just wanted an update. Last time when we spoke, you were talking about a capex plan, that is a growth capex of 15-20 crores for Shanti. So any developments or how much of the intended amount has been spent for capex?
There's nothing significant because of the COVID impact and also a lot of deferral has happened. So the capex, I think, will now happen between Q4 and maybe Q3 of next year. It will spread over the next 4 quarters.
All right. You were at the evaluation stage for some robotic processing for Shanti. So any developments in that case?
Yes, very, very early. I don't think we ever discussed this. I'm actually surprised that you guys didn't know about it, but I think we never... Are you talking about IoT? Are you talking about kind of robotics? Because I don't think we ever discussed publicly, and it's been very, very early.
Okay. And in terms of the pending order book which Shanti is having, which gives a visibility of around 9 to 10 months from today, in next 2 years or so, do you think Shanti will be able to do EBITDA margins of 20% or so?
Again, we don't give forward-looking guidance, especially on Shanti, so I don't think
Okay. Last question. Shanti has been accumulating quite a lot of cash, which is in the form of FD, I believe. So are you building a war chest for Shanti then?
Again, right? Shanti had accumulated cash before. We distributed cash on back. We gave a buyback at that point. Mm-hmm. So we continue to kind of, to see what to do with the cash, whether it's best used in that company or pull back the parent. That's something that we'll have to continue to evaluate over time.
So it's not that you'll be going for incremental dividends and reward the shareholders then?
No, please don't draw any inference.
Because Shanti has accumulated quite a lot, from around 13 crores to 45 odd crores in last 6 months. That is the reason why I'm asking that what does Shanti intend to do with the money that is lying.
I think like before also, no, we said we maintain the same stance, right? Which is, we continue to evaluate at a Shanti level. See, these are all independent public companies, so we continue to evaluate at a Shanti level whether the cash is to kind of use it, like a war chest or something else, or to bring some of it back to the parents.
Okay, that's cool. Thank you. Thanks a lot.
Yeah, thank you.
Yeah.
Thank you. The next question is from the line of Susmit Patodia from Motilal Oswal AMC. Please go ahead.
Yeah, hi, this is a question for Mr. Paul, actually, you realize we have on the call. So Mr. Paul, if you could give us like a 3-4 year vision, excluding the EV, can this business be like a 1,500 crore revenue business with nearly double-digit margins? Is that possible?
Yeah. You're talking about EV or cycles? Yeah, we couldn't hear you.
Cycles.
It's difficult to give, again, like the lines are forward-looking, and prediction. But we are up. But all I can say is that we are pretty upbeat in terms of the future. Looking at India plus, some countries in the globe with the favorable movement. So combined together, we believe that we will be in a position to deliver, and sustain our performance is what I can say. I think, and also with the introduction of, our approach towards some of these Japanese philosophies should help us improve the velocity in which we do things, and the way we manage the business, the sustainability that we can get out of it. And this combined formula actually, coupled with also talent management, I think is what Mr. Gurman alluded to help us to see superior results, over the future. That's what we are working towards, actually.
Okay, thank you.
Thank you. The next question is from the line of Ronak Vora, an individual investor. Please go ahead.
Sir, can you just explain the terms that you were using in the call earlier, TI1, TI2, TI3? I'm just new to the company.
Yeah, I think that this is there if you kind of go into our transcripts. This has been an approach we've been using for a long time. TI1 refers to kind of, the 4 existing divisions in the company. TI2 refers to, what we call kind of a more venture capital-led approach to growth, like our expansion into lenses or the electric three-wheeler business. And TI3 refers to more, what I would call an operational team model to growth, which is through acquisition. And CG is an example of that.
Any other question, Mr. Vora?
No. Thank you.
Thank you. The next question is from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Hi, sir. Congratulations for great set of numbers. My question relates to TI2. So, any progress on the TMT bar business, which I think you discussed a few quarters back on a call?
Yeah, like I said, with TI2, it's tough to kind of keep asking for progress every quarter and kind of, delivering on that. With COVID, quite a few, like the construction business, the CV business, all of those businesses got hit quite badly. So with some of the smaller businesses, we don't see kind of discussing progress on them. It's just like, I think as long as, if we're planning to kind of get out of a business, we'll let you know. But otherwise, they have to kind of grow, kind of organically to a certain scale before it becomes relevant to discussing on these calls.
And lastly, on lens business, what will be our capex, sir?
We've not determined a capex number. When we do, obviously, we do report it, through the board, and kind of we'll discuss it publicly as soon as we have a number.
Okay, sir. Thank you very much, and all the best for the future.
Thank you. Thank you so much.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Mr. Valian, if you have any closing comments.
Hey, Anupam, I think, like we said, I think we continue to kind of be, optimistic going forward. The biggest challenges continue to be on kind of supply on the raw material side. Demand still seems to be holding up, and so our outlook continues to. We just have to see how demand kind of plays out over the next, very optimistic now.
Sure.
Thanks everybody for joining.
Thanks a lot, sir, for the opportunity. And Margaret, we can close the call now.
Thank you. On behalf of IIFL Capital Limited, that concludes this conference. Thank you for joining us. And